Hey everyone, I'm Charting Man Dan with the Chart Guys. I'm joined by Chart Guys Lamont. In this video, we're going to cover checking in on the cannabis sector from a technical analysis perspective, but with a little bit different style. Lamont was a Chart Guys member years ago, and through observation, we could see that he knew what he was doing, good educator, part of his background, and his style, like anybody that becomes a full-time trader, learning from me, their style morphs into something different. And so he trades differently than I do with some overlap in some themes, but he uses volume profile, and I have been learning from him over the past month or so. And so for those of you looking for in-depth information about volume profile, we did a webinar previously that I will link in the comments of this video. So if you really want to fully absorb everything here, watch that first, then watch this video with regards to analyzing the cannabis sector. But we are going to check in on things on a good day. How you doing, Lamont?
Doing okay. How are you, Dano?
Real good. So good day in the sense that we just got a nice spike in the sector, some bull volume, testing recent highs, and that is on the back of Todd Harrison on Twitter sharing a post from LinkedIn, and it's from Adrian Sneed, who was a former staffer who helped write SAFE, and his post says, "Big cannabis announcement is coming from the White House this week. We've been getting a lot of dangling carrots that have said this quarter, maybe this month. This says this week. He suspects it will be a rescheduling decision from the DEA. Could be something more drastic, yada, yada. But this week is a pretty succinct timeline. So in response to that, we saw, again, bull volume spikes in a lot of places, a lot of interest picking up. And so the sector continues to look really good for the bulls. And we're going to check in on some of the major names. And let's kick it off. Lamont, pull up your
Sure.
charts.
Just share my screen here.
Let's start with MSOS as the baseline ETF, if that's all right with you.
Okay,
And
sure.
again, just some of the basic concepts of volume profile is the areas that he has drawn here. Essentially, it's areas where there's significant volume acting as support and resistance. And so we can look at them for targets, we can look at them for shorts and longs, and essentially they help us understanding, bulls are still fine as long as this level holds, or bulls need to clear this level. So take it away, Lamont.
Okay, sure. So, in a nutshell, like Dan already mentioned, I'm just going to look to the left, my charts are over here. But like Dan already mentioned, the idea is that the market it only does two things, right? It only balances or trends, right? So it's either going to balance and create an area of demand if we break out, or it's going to balance and create an area of supply if we break down, right? So the market must behave like this. All markets must behave like this because their job is to distribute goods effectively. In order to do so, you have to find a fair price to do business. A fair price to do business means we would be contained in a range. And the market is range bound, I think something like 80% of the time. So let's start off on the weekly time frame, and you can see exactly what I'm talking about. So MSOs, IPO, or I don't know if it's called an IPO, but opened up, rallied, and then since then has fell quite a ways. And you'll notice that there's a very significant weekly zone here where we pretty much just traded sideways from May or June of 2022 all the way to December. So basically 2 quarters. And so what the market told you here was for this time, during this time period, the market deemed it fair price to do business over 868 and under roughly 14 and a half, right? Because if the market is just trading sideways, then that's when the most people are exchanging shares, right? Because, well, if we can't leave a range, that means and more volume is being built in there. Okay, nothing's happening from a price action change, more or less, but more volume is being put in there, so people are exchanging shares. And then you break down from it. So if you break down from it after an area of balance was created, okay, well, what must be left behind? It must have been net supply here. There must have been more supply than demand here. So now that we are below it, the key for these buyers to negate the change from this breakdown would be to get back in here. So this is a weekly chart. This is really the next meaningful area where there was weekly balance. You can see how the value area low. So really quick definitions. The point of control over an area of balance is where the most volume was traded. So if you are under that point of control, well, then the majority of sellers from that structure are being affirmed. If you are over the point of control, then the majority of buyers from that structure are being affirmed. So we can use that key level to assess how well buyers are overcoming this area of supply left behind. Additionally, you see these blue lines, that's the value area high and the value area low. The value area is just where 70% of the volume around the point of control is traded. So it's where the majority of volume was traded. So we know then that if the buyers cannot find acceptance back over 10.29, then they're not finding acceptance in the big chunk of volume, meaning they're not doing such a good job of absorbing all of the supply from the zone. So we'll start off on the weekly time frame, because although the buyers are currently stalling at this value area low, they're grinding it. It's not a clear rejection. And even if we were to reject from here, just think about it like this: as long as price is within the extremes of this range, we should expect more balance just like this, right? Because essentially the market right now, these buyers from down here who created demand down here are trying to absorb the supply from this range, from this range, as long as they're holding over this higher low here.
So let me just jump in real quick. So the purple line in the middle of that channel is the point of control, correct?
Correct, right.
And just to give some fundamentals as to what was going on back there, we were chopping around. That fake breakout was, safe. The safe act is coming. It's coming. It's coming. It's coming. And then, oh, nope, not coming anymore. And so the market dumps when we get this, dangling carrot that never manifests into anything. And so everybody bails as we get another leg down to new all-time lows there. So in the moment, in the short term, we have a clear level. If you want to go to the daily chart real quick, 1064 is the level in the short term. We just rejected on this news reaction to the penny. It was the high of a couple days ago, and now it's the high of today. So what bulls want to see, with the way this ETF goes, is ideally there's been getting some inflows on this news spike, and we want to see at the end of the day today, ideally breaking 1064 to try and clear that short-term resistance level and have this momentum try and follow through into the rest of this week.
Cool. Yeah. Yeah, I mean, that is definitely an avenue that I am looking to learn more from you regarding, like, focusing in on how because I know you're not a fundamental analyst, but you have a really great knack for knowing where there is a lot of market fervor, where there's a lot of market attention. So I'm definitely looking to incorporate more of that into trading in general, because I definitely slept on this. I definitely slept on this move. And then we created that nice juicy setup back in here that I also slept on. And that would have been a really good one. But anyway, it is what it is. You can see that concept that we were just talking about regarding the market needing to work through prior areas of supply and demand in order to advance at play pretty much right here. So this is that big old weekly range that we were just looking at that's been problematic for these buyers to overcome. And you'll notice that if you just look to the left of it over here, there's this daily balance here. And without even marking it up, it's very easy to see that these highs were made pretty much right off of this. So if these buyers can't absorb the supply from here, well, then they don't create any change relative to this breakdown. So the idea is this is now our super key structure, 8.70. The lows of this range is super key. Even if these buyers, even if these buyers were to reject from the highs of this range here, I guess I don't need that right now. Even if we're to reject from the highs of this range here, as long as they're holding over this prior low, well, then we should expect this kind of trade, this kind of two-way trade. It's just what happens time and time and again. Like if you re-enter an area where there was a lot of chop, and we'll see this in some of the other MSOs, some of the other MSOs charts, you should expect us to do that again. It's like, remember that water flowing analogy is the same idea, right? Water has now flown back into this area where there are peaks, after maybe going to an area where it could no longer advance. And so now it's the same, right? We need more water to overflow these peaks if the buyers want to advance. So
let's now go to TCNNF, which has been one of the major leaders on this move up. They had the news of increased probabilities that Florida is going to get a recreational vote for cannabis in November. They need 60% to approve it, but still waiting for confirmation of that from the Florida Supreme Court. But it's clearly led the way up over the last couple of weeks, and it's in what we call a daily stair-step pattern, which is just a higher low every single day, and it's keeping that pattern going for now. I was watching for daily consolidation potentially today to shape up, but now with this rumor and a spike up, that does not look likely.
Yeah, so TCNNF, full disclosure, this is my US MSOs play. I have a bag. It's still red. I just slept on it. I didn't manage it well. It's a small part of my, my wife's technically portfolio. So I didn't really manage it too well, but
So
I am
she's down. You're not down.
exactly. She's getting wrecked. No. I can't believe she would have done that. Yeah, right. So, but this is for me, like, I don't know, this is not really technical, but for me, I just figure they're like one of the biggest operators in Florida. And the way that I see it is so many people visit Orlando just to, as you know, tourists. Tourists are the ones like you're in your vacation high, you know, so you're thinking, okay, I don't care, I'll splurge, whatever. We had a member in Colorado went to the meetup, bought hundreds of dollars of weed at Colorado because he's from a state that's illegal and then couldn't bring it back. And so I think he was giving it out to people or whatever. But that's the kind of energy that I'm trying to capitalize off of with TCNNF being the only individual ticker that I hold for US MSOs. But here's the idea that we were talking about before, right? So here is this major area where the market deemed it was more or less fair price to do business. I understand that there's a very large range here, but there's really not much trending in here, right? We pretty much just traded sideways through this entire block. You break out of it, you back test these highs roughly, and then you break out. Now that you've traded through it, look what happened when we came back into it for quite some time. This was, let's see, this was 116, so half a year where we traded more or less back and forth, very similar to this price action, which is just what the market needs to do. Because if you can't be constructive off of this structure and you come back into it, now the market needs to figure out, okay, which way are we going? Are we going to go up or down relative to this, which the market deemed more or less fair price to do business? So you break down under these lows, and I wouldn't be surprised that if you were, I don't have it marked up, but if we were to mark it up, that you'll also see that there are battles for these lows on the way up. So you break down, try to get back in. They can't, lower lows. You come back in here, you clear it, you hold a very clean back test of this, but you still can't hold over it. You fall back under it. It becomes problematic here. Clearly a battle for that level. And now we've made our way very much into this. So personally, I kind of think whether or not we get a positive reaction, I'm interested in looking to bottom fish off of these areas here where the volume picks back up pretty significantly around like mid sevens, and then certainly in the mid sixes, and then again in the mid fives. So basically this 5.74 level, the lows of this guy, even if we get a sell the news kind of a reaction, if they can hold over 5.74, there's reasonable relatively low risk bottom fish plays off of 574, trying to get back to all of these high volume areas. So if you hold this 574 area, then the first place the buyers would have problems is probably 639. After that, probably 739, 814, 940, etc., where all of these large peaks are, because that's where you would need the most volume to overcome them in general.
And those peaks on the right side are a representation of volume. Usually it's on the bottom of the chart. These are on the side to help us see the different price levels where that volume is taking place.
Exactly right. Yeah.
So it looks like
a
key resistance target. It looks like we have a hurdle to get over in the low 13s there, but really 14 to 16 area.
I think this is the key because like we actually got this question recently. The question was, okay, well, how do you know which structure is meaningful? And you let the market tell you, right? Because for example, if there's an area of balance that's sitting on top of a large range, well, then you know that if these sellers can't crack through this tiny little guy, it's essentially a proxy for the highs of this range, right? So it's sitting on top of all this balance. So you know then that if the sellers can't clear through this guy, well, then they're not coming into all of this, which means the bias must be sideways to higher relative to this breakout. And you'll notice that this little guy here, pretty much a perfect backtest of the highs of this range. You look out to the right, and then they try to defend it again. As soon as you trade back under it, just look how reactive it becomes. This point of control at 15.33, 1, 2, 3 near perfect rejections. Obviously not perfect. This is 15.39, so a 6-cent break. But then over here, you fail to get back over the structure as well. And then this is essentially the diving board, so to speak, for further downside, right? So that's what I'm looking at here. As long as they are holding over 5.74, these buyers should be trying to overcome, like you said, this big volume block. Just give it a second to reload, around 13. But really, the real test is this, right? Because if they can flip this back into support, then just like getting back into over this low, we should expect more of this. Just like getting back under this guy, we should expect more of this, which is what happened here. If they can get over this, we should expect more of this, you know?
Yeah. Let's go to GTBIF, which was the prior lead bull in the sector, and then TrueLeave, which we just looked at, took the momentum away, and it's been hanging out, not really breaking out over the last 6 weeks or so. And we are, it looks like, just under a key resistance zone that you have marked here.
Yeah, that's what I'm looking at too. So it's very similar to TCNNF, TCNNF, where you have this balance over here, this big old block of balance, and then a little guy sitting roughly near the highs of it. GTBIF is very similar, where you have this guy, excuse me, sorry for all the zooming. You have this guy sitting roughly on top of it. Now, definitely, you have data over here, but the reason why I highlighted this one is because these buyers on the subsequent back test of this breakout area, they do try to defend this structure. They fail, but they do try to defend it. And then what was notable to me was this rip up where they pretty much perfectly reject from the value area high of this guy. And so I'm using this guy, I think, as a proxy for all of this. Excuse me, sorry. I don't, is this a real gap, by the way, or did they just take over a ticker? Do you know?
Probably took over a ticker 2018. Yeah.
Yeah, that makes sense then. Yeah, so that's unfortunate. Hold on one second here. All right, so that's what I'm looking at here. I'm thinking, it's the same idea, right? If they can't get over this guy, then we should expect more of this. And there's a lot of volume traded down here. Like you can see how there's a big block of balance down here, and then a good amount of balance down here as well. So really down here near the 8s or so is where, if you're looking for that responsive trade, that's really where the best value will be relative to looking to stay in balance. But this is an interesting one, right? Because you can compare all of them, right? Like they are all likely going to have this MSOs, are all likely going to have something like this, a big old balance, multi-year balance, and then probably some kind of balance sitting on top of it as a pretty good reference. So we can kind of gauge them all, right? For laggards and leaders. If you're over it, okay, great. But if like 7 of the peers are not, and they're all rejecting from there, okay, well then, we probably should be a little bit more wary of the one who is above. Maybe, potentially it will come back below as well.
And that goes back to a recent point I made where, rising tide raises all ships. You have people wanting their favorite name to go up and they want everything else to underperform. But in reality, we want everything to be going up to give people the confidence in the entire sector to put more and more money to use and to get more and more aggressive with their capital. So again, just, I know everybody has their favorite name, but we want everything in the sector to be doing well if we're really going to maximize the potential upside. All right, let's go to some of the smaller tier 2 names. TSNDF is a name that and again, just full disclosure, I've got some MSOS, I've got TSNDF, OGI, MNMD. I think that's all I've got on this list. But TSNDF has been battling some key resistance, which I'm sure you're about to highlight.
Yeah, so it's very clear TSNDF. So TSNDF is trying to hold over this all-time low level at 1.19. If you zoom out here, you can see that they try to hold over. There's a little bit of just 3 or 4 day balance right here that is not really super necessary because for us as guides, because we've already traded through it many times. But you'll notice that the buyers defend the value area high many, many times as well, even though they trade through it pretty meaningfully over here. So the way that I see it is this is more or less still balanced over that prior demand zone or current demand zone, and everything is all of this trade so far can be dictated by that prior demand zone, and then this supply. I think you would be hard pressed to argue that this is not the key supply here. You break over the POC, no follow through. The next day you open up pretty much right at that point of control, and then you fall down. This is what I should have done yesterday on the ES. When you get an open right at a major point of control, only a few things are going to happen here. The day plus buyers are going to try to take price over yesterday's range, or the day plus sellers are going to try to reject. And so when you have an open here and you know that you're near a highs, the potential highs of a move, right? And you reject from that major point of control, that is obviously not an OTC ticker, it's not liquid enough, but that is a sell the open kind of a situation. Throw your stop over the current high, and if you never revisit it, then well, obviously that's the best case scenario. So what I'm looking at now is this test here. You'll notice is pretty much been 2 near perfect rejections from the point of control for now intraday. So the idea then becomes, all right, well, what are we going to gauge to see whether or not buyers are still trying to crack over this structure with a key level of 2.37? It's all about this now. Right? If these buyers can hold over this little bit of demand, with the best case scenario is finding the most acceptance over 2.16, well, then this trend from the lows of this range is fine because you have sideways, right? That's the market saying this is more or less fair price to business. Breakout, that's the market saying mark up. Sideways, breakout, back test the highs of this range, breakout, back test the highs of this range, and breakout. And so far, you have not traded down through this guy. So as long as they're holding over this guy, that would be ideal. And we can also use this structure to our left over here as a bit of a reference as well, because this was the old supply that was hanging out over here. So even if these sellers do come back down, they trade into this range, the best case scenario would be to hold over 1.95. As long as 1.95 is being affirmed, then we can assume that there's demand coming out of this area. And then as long as 1.95 is holding, then these buyers should be trying to flip this guy back into support, because that's it. That's clearly the meaningful supply. And then after that, it's kind of airy until this guy. So pretty interesting one. It's a little bit different from the charts that we were looking at before. It's hard to say whether or not you would call it relatively strong or weak. I would say weak, because while this is like more or less sideways trade, it's, it fell much more than its peers, and it's not as tight of a range. It was a 90% decline relative to TCNNF here. It's probably pretty similar, 73. So I would say TSNDF is looking a little bit weaker, but the key areas are very clear for TSNDF.
Yeah, it had relative strength over the summer compared to the sector, and then it faded a good bit and has been lagging behind since. The next name, AYRWF, had warrants that were recently where, if you hold until last, I forget if it was Thursday or Friday, but you get warrants. And then once that record date came and went, it sold off because people said, all right, I got my warrants now. I don't need to keep holding these common shares. So that's the most recent big drop, but Bulls trying to come back today, it looks like.
Yeah, so for this one, it is pretty interesting. You don't have that same reference back here. It looks like it started trading a little bit later than its peers, I believe. It looks like it. And so, but it is, again, still very clear, right? The idea is you have this key supply over here with the point of control at roughly 5.03. It's a solid amount of volume traded here because it was so tight over here. So you'll notice then that when you finally do break down from this level, this high is pretty much a perfect rejection. Not perfect, but it's pretty much a rejection off of the lows of this area, right? Pretty much no follow through above. And then ever since then, it's been problematic for these buyers. They haven't even come up to test it. So looks like really then for now, it's this guy. But this is, in my opinion, more important to dictate what the intermediate term is going to do, because essentially now that we're traded back over here, and you can see how this guy over here was initially problematic. These buyers clear it, try to hold back test of it, can't, roll back down under it one more time over here, hold the back test of it over here, following this gap up. And obviously an incomplete gap fill is always a good look, right? For the side that gapped up, because for the side that gapped, an incomplete gap fill is always a good look, because the gap is a change relative from this session. From this session to session, that was change, right? A notable change. And then to negate the change, these sellers have to bring price at least back into that range. So whenever you get an incomplete gap fill like that, it's always indicative of weak selling if it's a gap up, and the vice versa, of course, for the sellers. And so now what you're looking at, you're pretty much, I don't have it marked up, but pretty much back test of this is what these buyers are trying to defend. But personally, I would be watching this guy at 256 and 503. I'm thinking as long as they're holding over 256, and even if they break down under it, if they can hold over the lows of this guy over here, 2.25, they should be trying to come up here. So if the fundamentals keep coming in and there's more hype or whatever, they should be trying to press up to this 461 to this 503 level.
All right, now OGI. This is the leader, technically speaking, from the Canadian side of things. I'm liking this name a lot. If we go to the weekly time frame, and actually we can pull up CMPS first just as a comparison. And so what I really liked here was CMPS, the weekly chart, looking like a cup and handle. Again, I don't want to call it a cup and handle because that's a continuation pattern. But the psychology was there where you reject, you bull flag, and then break out. And so now back to OGI, I saw the exact same thing shaping up on the weekly, where we reject from $2, we bull flag, and now we're breaking out above $2. And so I entered on that bull flag, stuck my stop under the low. I used the EMAs. They back tested right off the EMAs that were crossing bullish. And so really liking how we're started. It's falling into place in terms of exactly what we wanted to see. And now it's just a question of, can we start to hold $2 as support and follow through? So what are you seeing from a volume profile perspective here?
Oh, that's weird. I should have my own drawings for it, but I must have cleared them by accident. I gotta thank you, Dan, because I totally followed that trade with you. I did that. Like these days, I do not want to pass up on your. Obviously, it's never going to work every time. I'm going to control my risk, whatever. But thanks, Dan. Appreciate it. That's a nice one. That was a good one. Okay, so for OGI, it's really all about this guy. You can, it's very easy to tell where there are problems, right? Because if you see peaks here, right, and then you just look to your left, okay, well, what are those peaks? those peaks must have been failures to get through an area, right? Not must have, but are probably failures to get through an area of supply. And if you just look to your left, they will show you, the market will tell you the market is not trying to be sneaky. I mean, sometimes the market is trying to be sneaky, but most of the time, the market is pretty straightforward. It's letting you know, hey, listen, we are weak relative to this supply, or we are strong relative to this demand. And then that's how you go about things. So you'll notice that this point of control at $2, I mean, of course, it's a psychological level, but also it's where the majority of volume is traded in the structure, pretty much a perfect rejection over here. And then now you were grinding the value area low for a few sessions, and it was looking like it was problematic for buyers. But like I was saying before, it's really always a matter of where did you come out from. So if you can't advance, that's one thing, right? But you have to call it for what it is. How well is the other team preventing the breakdown? I mean, how well is the other team negating the last move up, right? So here's the breakout level, or you can even use this one. Obviously, it's imperfect by all means. I understand that, but the idea is, as long as you don't find acceptance back under 160, which is the highs of, arguably this range, I wouldn't fault you if you just included these, but personally, I would include this high as well. And you can see how even this initial back test intraday, right, is pretty much makes the low for that day. And so this day you could consider change as well. This was the breakout day. So this is more or less no change. Fair price to do business over $1.16, under $1.45. This breakout day is very clearly the market telling you, hey, listen, there's a change now, right? And so while they're not advancing so well, and this is the kind of thing that used to trip me up a lot, I would see failures at a certain area, and then right away I would think, okay, it's time to hit the sell, right? And I would be not to say that that's wrong, that's totally fine, but you have to temper your expectations based on how well the counter team is advancing as well. So while the buyers are not advancing, we're not advancing so well to that point of control test recently, you also know that on the subsequent back test of this high, the sellers did not get a lot of acceptance under where they have to get either. So it was really anybody's game, right? And because the team that was leading heading up into this match, so to speak, consider every area of balance a match, and the team that was in the lead were the buyers. So you have to give it up. And you see me do this when I'm trading futures all the time. Practically every single Friday morning stream, you'll see me do a very similar play where I'm going with the direction of value as long as the market is giving me reason to do so. So last week it was like buy the gap up, stopped out because we went back down under the open, but then there was no acceptance under the regular trading hours high. So I just bought that, pass back over the open again, because that is the market letting you know that the change from yesterday, the gap up, right? So if you gap up, sellers are trying to bring prices back into yesterday's range. If they don't do that, what is the day plus implication for that? If you can't get, if the daytime frame buyers can't get price back into yesterday's range, what are they going to try to do? They're going to try to move prices higher above yesterday's range, right? So you stay with the team that's been winning the most matches into that moment, even if right now they don't have possession of the ball. You know what I mean?
Trend. Yeah.
Yeah, exactly right. The trend. Right.
Let's do one more here quick. TLRY. I didn't give you this one in advance, but this is one of the major Canadian names. It's really been struggling overall. It's been lagging behind. People are watching for it to potentially be a laggard to this move up. What do we need to see for bulls to start showing us something constructive here?
That's very interesting because this is a Canadian name, right?
Yeah.
That this is benefiting from the US hype as well, huh?
They've got some Germany exposure. Germany is potentially moving towards, or I guess is moving towards, some medical legalization in April. That's a little bit of a benefit, but really just a proxy play where these OTC names are very thinly traded and illiquid, but these names like Tilray on the Nasdaq much more liquid. And so in the past, if the cannabis sector is doing well, it doesn't really matter if it's US based or Canadian based. This name generally has seen love, but this time around, it has been a bit different because it has not been participating over the last month.
Yeah, Tilray I remember Tilray when it opened up, and I like it kind of caught my attention before this big rip up. And like, I'm not saying that I knew that was going to happen. I did not know that was going to happen, but I do have a buddy who he used to work in national securities, but now I think he's changed. And he was talking about how he and his broker buddies were like pushing this on people. So I'm fairly confident that, this 1,000% rip was partially due to, like you said, it was on the Nasdaq. And so I think like a lot of brokers were able to sell this to their clients if they wanted to. They're obviously not doing so well if they bought it at any time ever, really, unless except for this little month. But it's also very clear here, right? So the idea then is you look at this, and this is a big old chunk, right? And I guess you could separate this guy over here and then this guy over here, fair enough. But from just the local perspective, right, I've just been looking at it like using this guy, but really we should use this structure, I would say, and then this guy, or rather this one. Okay, so let's just start from the beginning. So let me just clear all of this because this was all, these drawings were just from like members, I think, asking for requests. So it's definitely not something that I was checking out. But you have this guy here. Hang on a second. I would say, as of right now, these highs are really being made off of this. But I would say that really what we care about is this one here, right? Because we are getting these moves back into this range. So then the question becomes, what's dictating the highs of all of this? So it's probably this guy. I need all of these if I'm following my guidelines, which are imperfect, of course, because no such thing as perfect. So for Tilray then, I think this is quite notable. Many point of controls rejections, many point of control rejections, nearly a perfect one here, nearly a perfect one there, value area high rejection here. And so the reason why I'm not really looking at any of this over here is because the way that I'm looking at this is pretty much balanced, right? This is more or less fair price to do business. And then these breakdowns of this area were just so far not really that great breakdowns where the sellers advance. Surely this is good follow through. Surely this is good follow through. But that's just a matter of it being cheap and whatnot and near the lows or whatever. So I'm thinking perceive all of this as one structure. So keeping it real simple, just use the lows of this range here, 2.52. And then as long as these buyers can find acceptance over 2.52, then we should expect this more balance. And if they can, come to the highs, rotate to the highs, they should be trying to crack this 4.43 level. They need acceptance over the 4.43 level, not just the pop and above to start really squeezing these folks, because the sellers who are entering using this guy as a reference, or if they're just old sellers with orders in there, limit orders or whatever, this is clearly their reference. And so you don't squeeze them unless you can hold there. Right? If you keep building more volume, trading, people are buying more shares than they're selling above 4.43, then they're essentially squeezing the sellers out of this area of supply that was left behind. So this, and you can see how this 2.5 level, I assure you, I did not plan for this. It's a perfect rejection locally right now, right? So I would say the market is being pretty clear about what it's trying to get done. So these breakdowns lacking follow through, these break back in also lacking follow through. It's really a battle for 2.52 right now. And I guess it would make sense then to mark this guy up as well, because of course, if we can't trade through this area of balance, well, then we're not going to see new lows. So I would just mark up this guy as well. And now you have very reasonable areas to be looking for trade. So I would say for Tilray, if you see weakness on this, it's pretty reasonable to be looking for plays here. I wouldn't scale into something like this. I would much prefer something like a move down, you don't see follow through, and then on the pass back over, okay, hit the buy, throw your stop under the low. The first place you're trying to get to is the value area high. If you see acceptance over that, you're trying to get back here. Basically, we should expect more of this kind of balance under 252, under 170, and over 175, 168, as long as this structure is supported and as long as this low is problematic.
All right, I think we're going to end there, Lamont. So again, if you like this style of analysis, check out the link in the comments of this video, which is the webinar that goes more in depth, where it's Lamont essentially teaching me his style. Lamont heads up our futures room with the Chart Guys chat room community, and he also does our weekly swing report, which is a once a week subscription service where he outlines swing trades based on volume profile in terms of determining entries and targets and things like that. So if you want more Lamont, check out all that stuff. I appreciate you, Lamont, giving us some insight into your brain and how you do technical analysis. And we'll see if this momentum from today can continue into the rest of the week in the cannabis sector.
Cool. Thank you, Dano. Appreciate you guys as well. Appreciate you and you guys, for viewing. Different reasons, appreciation, but appreciation nonetheless.
All right. See you next time.
Later.